Hello and good day to all friends. This is Mojtaba Rasti from the Thales Group, and today is November 6th, 2025. I'm here with you to analyze Bitcoin using the Thales Market Screener tool. Please keep in mind that these analyses are for educational and informational purposes only, and if you use them to take positions in the market, the responsibility for any profit or loss is entirely your own. Well, according to the review we did yesterday and the expectation we had, we moved upward. We saw the lower boundary of the upper zone at 104,500, and now you can see signs of correction and movement downward in the direction of this arrow. Although the RSI is high and the moving average is also high, in fact, it's a kind of bullish signal, a short-term signal, actually a high moving average. We need to see whether this trend, by forming a lower low and then a higher high, will create a short-term bullish trend, or if not, whether this will be a strong move back down to 99,000 or 100,000. If we take a look at the daily time frame, you can see after this candlestick, there was actually a strong downward momentum. Well, this green candlestick, which has taken back a significant part of the previous candle, let's say about half of it, well, that's the context. I think we might be forming a triangle here. We need to see what kind of triangle this will be. Is the triangle that's forming here a symmetrical triangle? Or is it a descending triangle like this? Or is it an ascending triangle? These will make a difference. The likelihood of which direction will go, because symmetrical triangles are well known. They're triangles that indicate a continuation of the trend. That is, the continuation of this move downward. Likewise, descending triangles are continuation patterns. But ascending triangles, when choosing a downward move, usually these patterns are never 100% certain. Usually, we need to see a sign of reversal. We have to see what shape this triangle that will probably form here will ultimately take. The next important point is on the weekly time frame. As you saw, we updated our triangle and our ascending channel, and now we are at the bottom of this ascending channel. At the same time, you can draw a trend line here that is currently acting as support. Look, there's one touch point, two touch points, and the third one falls around 98 and 99, which you can see is now acting as support. And the next important point, which I saw in another analyst's review, and they pointed it out, look. Actually, it's the 50-week moving average. Look, the 50-week moving average. The price has touched it twice before, and both times it acted as a launch point for the price. That is, as long as the price was above this moving average, we were in an uptrend. See here what a bounce it created. Here it touched, and here. And we have to see how this week's candle closes in 3 days. Let's see if it can close similar to this one. If we close the weekly candle above this 50-week moving average, well, that could be very promising. For now, we are still above this moving average, so we can still be hopeful that the uptrend will continue, unless we drop below it and stay there. In that case, the story will be different. Alright, let's switch to the 4-hour chart. Let's check out the market screener from the start of today up to now, focusing on the important expiry for tomorrow, which is the Friday weekly expiry. For the November week, 5,150 Bitcoin traded as 2,513 option contracts. The result is ambiguous. It's leaning downward, a bearish outlook, though it's volatile. You can see it covers from 90,000 to 104,000. We're moving along the break-even line in this range. From 90,000 down to 86,000, it goes into profit. This curve is currently bearish, and right now we're at 103,000. As the price drops, the delta increases. The peak at 99,000 to 100,000 is a very important support for us. If that breaks, then yes, you can see a lot of puts have been bought up to around 90,000. But this area is crucial for us. On the upside, as the price increases, there's resistance. You can see that up to 114,000 calls have been sold, meaning with price increases, the delta decreases. Calls have been sold, and the 114,000 level has become a tough resistance. So, with this kind of structure, we can still see a higher probability of a move downward. If we move the slide forward, the story changes. Look, from November 6th at 8 o'clock, the curve becomes more volatile, meaning our bearish expectation decreases from 8 o'clock. If a bearish leg comes in, it goes into loss. Look for tomorrow. The expected volatility is between 101,300 and 105,000. 101,300 to 105,000. So, based on this data and considering the technicals we're seeing, where a correction has appeared, we can say that the downward move might be limited to 101,000. This lower line in this zone is the point of maximum profit and loss, and here it could find support. So, based on the explanation we gave, as we said, with the formation of a higher low, we can actually consider this upward movement to continue in the short term. Because as we move forward, the bearish view, the bearish side, goes into loss and a volatile state is expected for tomorrow. Now, let's take a look at the process database. You see, from the process data, we get the same impression. The entire contract, in fact, the whole curve looks like a short sale, and right now we're at its peak, meaning 103,800. This could. Of course, this higher peak can also go further up. We can't say for sure that this is the exact point. We're talking about ranges here. Now, if we turn on the gamma, you'll see that right now we're at the average selling point of the calls, around 104, and the next important level could be 106. But on the downside, again, you can see that up to the delta peak, 91,000 has been seen as the floor. So again, here we can more likely expect a move to the downside, given the structure that's formed here. Let's look at open interest. Well, yes, we have a lot of negative open interest. You could say, then, that we can make this positive, and when you do that, you see it still becomes volatile. That is, if we remove the negative open interests that have been processed from the database, we still see some volatility, with a floor at 101,000 and a ceiling at 105,000. So this shows that until tomorrow, the likelihood is that the downward move could go as far as this point, around 101,000, maybe 100,000, 101,000, and from there it could send us back up again. Let's move on to drawing the zones and updating the indicator. Well, as you can see, the intersection of buyer and seller opinions both are at a loss. The upper agreement is at 104,500. The lower agreement is actually at 97,600 and 98,000 and below, which are mostly at a loss. So we can say that there is a bit of an upward tendency. It's showing itself more towards 104,500 and 105,000, but both are still at a loss. This shows a volatile situation, and both zones are zones of disagreement. Let's update the indicator and continue. Well, the indicator bands also show that the momentum is downward. If we look, the intensity and momentum of the downward movement is decreasing. The lower highs and lower lows are moving down, but with less intensity. Let's update the zones and continue. Okay, the zones have been updated. As you can see, the lower zone is a bit wider. Both zones were at a loss, both are zones of disagreement, and the middle zone has become quite wide. It's actually from 100,000 to 102,000. The maximum profit and loss for sellers and buyers. The lower zone is around 97,000 to about 98,500, and the upper zone is around 104,200 to 104,900, 105,000. These are our zones. Now let's take a look at delta and gamma. Here, it doesn't give us the gamma. It doesn't show it. Let's make sure it's processed. Alright, we'll use the process data. Give me a moment. Alright, here the main steps we have are 100, 100 plus, and 500, 100, 100 plus, and 500. It's 103,600 where the steps are shorter. In fact, it's the ticker which shows that depending on where the order is placed, most of the ticker here is call selling, and our maker here is a call buyer. So at 103,600, the maker is a call buyer. You can see here that the resistance effect has shown itself, and the market maker's action, in the interpretation we're providing, has pushed the price downward. There aren't really any other significant steps, so for now, we don't need to deal with these red lines anymore, and this one point is enough for us at the moment. Alright, let's go back now to the process data set and let's take a look at the other days. If I add the due date for Saturday, November 8th, you'll see that nothing changes. The trend is still downward, and in fact, it might even intensify a bit. Looking at Saturday alone, again, the downward trend dominates. Even though the bullish leg goes up a bit, the bullish leg goes up a bit, but the dominant force is still the recent trades, meaning the correction is still in control for Saturday. So 100,000, again 100,000, 101,000 is still being targeted. The due date of November 14th, if you look at the trades from the start of today up to now for the November 14th due date, you can see it shows a volatile situation. The floor is even showing as low as 95, and the ceiling is 109, the ceiling is 109. If we move the slider forward, it doesn't really change much. Overall, it's the same. There's an emphasis on the floor of 97 to 98,000. Now, for November 21st, you can see that movement is possible in both directions, and at the end of November, we still have an overall bullish outlook. It's a bullish outlook, but actually, if meaning the general shape of our curve, you could say favors an upward trend. But if we zoom in, well, we still encounter something like this. A volatile situation where we're again heading toward the ceiling. We're at a point on the chart right now that's really important. It could honestly be a turning point. That's why, in my opinion, you can see a certain amount of confusion among traders. Let's take a look at the detailed trades. For tomorrow's expiration, there are 5,150 bitcoins, of which 2,400 have been bought, and out of those, 857 have been bought as calls. 1,549 puts have been bought. The put options are clearly dominant. And if they see their target below 101,500, actually, if we go back a few candles, about 4 candles back, we reach this peak. So what's happening is on the downside, meaning these puts are being realized, and their target is also 101,000. So it's in favor of a drop. The calls with 800 Bitcoin see profits above 104,000, and we ultimately went up to 104,200 on this candle. So you could say that maybe even the call's outlook was realized on this candle. But overall, the outlook is clearly in favor of the downside right now. Let's look at the sellers. 2,740 Bitcoin sold, 1,700 and 703 Bitcoin sold. Call sellers, 900 and 700 Bitcoin sold. Put sellers. As you can see, the sellers in front of this bullish leg have seen a ceiling. They've created a ceiling which was at 103,400, and that level was noticed. This ceiling was seen again on this red candle. Look at this red candle, we went up to 104,230, while here the ceiling was seen at 103,400. So, the ceiling for the call sellers has been identified, and now let's move to the put sellers. The floor for the put sellers is probably at 101,900 or 102,000. So, somewhere between 101,500 to 102,000 or 101 to 102,000. These are the numbers. You can see it's right where we've marked with the arrow. The floor of our bullish move isn't coming from a bad spot either as a target. Considering that when we moved the slider toward the middle, you saw the bearish leg came down, meaning for tomorrow some volatility is expected. Recent trades have shown volatility with a floor around 101, so we can expect some support here. All right. So that's the breakdown of the trades. Now let's move on to the process database. And let's also add the open interest, which you can see is 947 Bitcoin in positive open interest for tomorrow. Again, if you look at the 90-second window, the floor is 101, the ceiling is 104,600. And for high volumes over 10 Bitcoin, there are 46 trades. 15 Bitcoin, 12 trades. Apparently, we have a lot of 12 Bitcoin trades. Yeah, there are quite a few 12 Bitcoin trades. Let's check them out and see if the number goes up. But there are 38 and 38 trades in total listed on the page. Yes. The biggest trade we have is an 80 Bitcoin short call at 110. 80 Bitcoin short call at 110,000 for tomorrow, and it was entered today as well, around 11 a.m. today. This 80 Bitcoin trade, the trader is also seeing the possibility of a move up to 110. They want a cap below 110, so this range, anywhere in this range, could be what this trader has in mind. The price could stop anywhere within this range. So we can interpret this as them expecting a ceiling at 110. That was one of the trades. We also have a 50 Bitcoin long put at 98 and a 40 Bitcoin short call at 109. And as you can see, the overall situation is volatile. Let's see what strategies we have. Look here, there are probably two. Again, these are more. Yes, look, this is a short straddle strategy. Its maximum profit is right here, with a floor at 101,300 and a ceiling at 104,700. Let's add this up together, combine the straddles. See, this one is a straddle and this one is also a straddle. And this last one, let's see what it is. This one is also somewhat of a straddle. So in total, we have about 125 Bitcoin in a short straddle strategy, with a floor at 101 and a ceiling at 104,500. All right, let's take a look at the liquidity. Look, in the past 24 hours, let's see what kind of liquidity volume we have up to 101,000. There's a gap here at 101,000 where there's no liquidity, then again at 100,300 there's liquidity, and right at 100,000 for now. So, it seems to me that the goal is to collect liquidity at 101, and then higher up at 104, 104,700, and 105 there's liquidity again, numbers we've heard a lot in the analyses. Let's look at the 48-hour view. Here you can see liquidity is sticking just below the price, with liquidity up to 100,400, 100,000, and 101,000, a concentration of liquidity. On the upside, from 104,600 to 157,000, liquidity is present. So, if I want to sum it up in my personal opinion, considering that we can reasonably expect a short-term upward trend, and based on the straddle conditions you saw, the price ceiling was even observed at approximately 105 or 6,000. Break time equals 0.5s/, and of course, the sale of 80 Bitcoin call options, which is among the notable activities, is also worth mentioning. Exactly in these trades, we had positions for tomorrow, and they even saw a ceiling price of 110,000. So, in my opinion, we can expect a potential upward rebound starting from Friday. Now, the hypothesis we have in mind is that a triangle pattern might form here, and we could see some up and down fluctuations for a few days. So, we can probably expect some support around the 100,000 to 101,000 range here. I think we can come up with something like this. We can create a scenario where it hits here, drops to around 100,000, and here 100,800 would be the bottom of this wedge, and then it attacks 104 again, and we go up to about 105. We can expect something like this. Or we can even imagine that it comes back down to this same 104 area and leans downward. I think we can expect that there might be a bullish leg forming here. Otherwise, this same move could lead to breaking below 100,000, and then we'd be looking at another attack on 99,000, and possibly even numbers like 97,000. The overall trend, based on the micro movements, is downward, there's no doubt about that. But the real question is where the price might find support. Will it hold at 100,000 or 101,000, or will it actually break downward? Personally, I think there's a slightly higher chance it can hold. Thanks for your attention, and until the next analysis, goodbye.